Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March 9th. Initial jobless claims came way higher than expected and way higher than the previous one. And continuing jobless claim, the same, way higher than expected and than the previous one. That means that more and more people are claiming jobless, and this is good for the Feds. Fed wants to cool down the labor market and to cool down the economy. So more people claiming jobless is actually good, quote unquote, for our situation, because that people will have less money to spend and the situation will be worse for them. It's a pity, but it's the reality in order to cut down the spending of the people. Jobless claims means that we are more and more seeing jobless people, and I think that's in the short term good for our situation, but at some point we need the economy to be held, the economy to not enter recession. And this is a tricky spot to be at, because at some point, once the Fed stop and pivots, stop hiking rates, I think these numbers will be taken into consideration the other way around. Higher jobless claims will be bad, but right now it is good for inflation, to cool down the inflation. So let's see how the markets reacted. Look at this. This is really, really good. And this is the whole picture of today. We have the first part in which we basically spiked up after seeing the jobless claims number, and we go higher and higher and higher, and we went into the open holding these levels, holding this pivot, and we marched even higher. This red line is actually quite critical in the 30-minute chart. This was previous support, might be resistance. We are seeing some consolidation down here and some resistance for sure in this range for today, but the local yesterday's resistance was destroyed during this move in pre-market and into the open. So going back again to the 1-minute chart, this was the first move, and the second move is it's actually consolidating. I mean, we are still quite bullish. We are, let me first do this and this. Okay. We are 0.50% on the day on the green, and Microsoft is holding quite well. Apple too, Amazon, consumer discretionary is looking quite good. And we are basically holding. We are holding these levels. Let's see this spot. If we break down and we enter again into this range of yesterday's pivot, yesterday's high, that would be really bad, because we will end up being in the same open price. So let's see what happens here. I wouldn't be surprised if we consolidate here, we hold 12,280 and we spike again looking for 12,300. And most importantly, look at this blue dot line. This is last week high. Regarding the daily is looking pretty okay. In preparation, look at this. I've marked all these bottoming tails that look bullish, and we are wedging. We are in a triangle, more and more trying to build pressure from off the 200 moving average, and this kind of move would be really good. Let's see if that happens, because that will be a market structure change, and I will be quite bullish at that point. But we have to wait for tomorrow. Tomorrow, non-farm payrolls and unemployment rate 1 hour before the open at 8:30, and we are expecting way lower payrolls. Remember that the last time we got 517, a super spike from the 260 and December last year, and on January we got that spike that, I mean, destroyed the markets. And I think we have to pray for way lower payrolls and at least the same amount of unemployment rate, 3.4. Right now we are expecting and forecasting the same, and if we go higher, unemployment rate would be aligned with these jobless claims. That would be good. But if we go lower, if less people are unemployed, I mean, fasten your seatbelts because I think it's going to be really bad. These average hourly earnings month over month is going to be key, and the same for the year over year. We need less earnings. Less earnings. Less earnings mean less spending, and less spending means less inflation, less activity on the economy, and that's the target. That's the objective of the Fed. And if more people has unemployed and more jobless claims, that would be really, really perfect. So let's see. Before closing up, let's see. Yeah, look at this. Yeah, they are expecting. Let's see the volume. Whoa, 2,500. Yeah, this is the kind of move that. Let's see if they buy up this. But this was a clearly flat triangle, descending triangle. But let's see what happens finally. So as I was saying, dollar in the red. Dollar is pulling back. It's not looking bearish, but it's pulling back. And all the yields are pulling back due to these jobless claims. And the inverted yield curve, look at this. After this sell-off, we are bouncing. Let's see if this is the start of the lower low that marks the start of the move higher, because more and more the 10-year is looking really bad and it's hovering again 4% right now, 3.97, and the 10-year is the recession yield. If this goes lower and 2-year goes higher, more inversion in the inverted yield curve from the 2 and the 10-year. That is markets versus the Feds. So let's see what happens. VIX, at least, we don't talk too much about the VIX because it's doing nothing, but at least we are down. We are here. And finally, let's see the sector funds. Are we seeing strong consumer discretionary? Yes, at least it's in the green. Financials is doing this. Be careful with this. This is not normal. I think financials are tight, are aligned with the fears of recession that a lot of investors are seeing. And let's see what happens. And finally, look at this. Energy 0.30. And if you see crude oil tried to go higher and it got smacked. Look at this. This move was really nice along with the markets, and then boom. So I think this is looking like a rejection. Look at this topping tail. It's trying to build momentum to do something like this again, but it's being rejected and rejected and rejected. We will remain in this tight range, sideways consolidation around this, unless we break this spot. This spot is super important. Also, the strategic petroleum reserve is being filled at this level, 73 and 70. So this is, if you are trading oil, we are in the middle of the range. So, well, quite boring. Final thoughts on the Nasdaq? Yes. This is what I was talking about. Let's see the 15-minute chart. Yep. This is the pivot that I was looking, and well, it is happening. This was the resistance of yesterday's. We are holding these levels. I think buyers are in here also. Look at this bottom. Look at this close, the tail and the close. We are not closing below this level. But I mean, this was a quiet move. Still the selling pressure today. And I mean, we could perfectly end the day in the red. We have to see if we have continuation to the downside after these weeks. Let's see if that happens. Give it 10 seconds. If this continues down, I will think that shorts are piling in. But I will consider, okay, look at this. Yeah, there it is. There it is. Well, so be careful, be careful, be careful today. This was a nice move, but it's starting to look quite weak. Be careful, guys. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always, but remember that the training day is not over yet. Look at this. They are buying up these levels. Buying up. It's still holding. Let's see what happens with the Nasdaq. But remember that discipline and risk management are key for your success. Stay safe, everyone.